Good afternoon, Scott Rella, T3 Live. Welcome to today's recap. It is Wednesday, and we definitely had a little volatility today. Early on, we came in, futures are down 5-6 handles, quickly went positive, pushed back to the old highs, so close. At that particular point, I think I came in with 11, 12 longs, and I wasn't really making much money. I'm like, we're at highs right now. The Dow's up 95 points, and Mark is kind of crying a little bit that his P&L is not going up. My P&L really wasn't moving, and lo and behold, sometimes that tells you that the action really is not as good behind the scenes. With that being said, the banks were weak. I think the Dow was up 60 points and the VIX went positive, and then all the dots started connecting, and the market reversed. People claim that it could have been the statements by Lockhart midday saying that QE will be over by the fourth quarter, or who knows. The bottom line is we came about 90 to 100 handles from 2 weeks ago, right to the old highs. The market's been trying to make as many people feel as stupid as possible, and we reversed today. So if you look at the chart here, of the SPX, you will see, without any opinions, the move that we saw, this red dog reversal from the 150-day moving average, reversed right here in front of highs. Question now is, is this a day to take notice that will lead to another elevator type move all the way down? At this point, you don't know. But if you trade actively and you reduced your risk right here on this red dog reversal, when we took out or came back below 1842, you don't need to know whether or how deep we go and where we hold or whatnot. Obviously you're holding some longs, you could get a little wishy-washy if you can handle it, but either way, this candle is somewhat of a sell signal. Okay, and then also a little confirmation is we went below 1835, which creates an outside day, not only a red dog reversal. So with that being said, in my opinion, following the good book, my trader good book, I would think you would at least see a move to test this moving average, or maybe even down to 810. So if you were looking for a cute short, or if you were even looking for a cute buy, meaning you didn't sell your longs and you're like, okay, you did sell your longs and you're very bullish and you think we're going to take out this area, but you're like, okay, we need to come here first. Then, you made some adjustments today. So with that being said, outside day, I would say if the bulls or the bears wanna keep a little bit of control here, they probably don't let, if we open up tomorrow, maybe we build some kind of H pattern and roll over and not just engulf this move all the way up. That would be pretty frustrating. But if we open down, you'll get your day and a half trade into the moving averages, and then we see what holds. I think what would be very constructive is if we hold around, the 50-day now is what? 1813-ish. So if we could hold anywhere between 810 to 1820, that zone, that would give us a retracement of, what is that, a third, right? If you go to your Fibonacci retracements from here all the way to the highs today, we have not even retraced 25% of this move from the lows to today's high. Okay, if you've retraced 25%, you're still deemed a very, very strong tape, just not a pain trade. And if you come in and test the 0.382%, that's still deemed strong, deemed constructive, and probably would be better because it'll give a chance for some longs to get in and maybe some shorts to make a little bit of money. And there are some that say, okay, we could do 50%. By the time you're at 50%, people are already saying we probably have to test the lows and then whatever. But for right now, here's your upper range. I would think if you reduce some risk, you did the right thing. If you went out net short, I actually went out net short. I actually started to reshort the bounce. So this is how I did it today, because you could always come in and make some changes. I had a lot of longs. I got stopped out of a few of them in the first hour. And then when I went to leave to go to the gym, I put stops out, and I think I had 8 positions when I left. By the time I came back, I had 3. Down money. So I saw the bounce in the spiders back. Those on the VTF saw. I started to short the bounce in the spiders around 184.20-ish, something like that. Let's go to the spiders. So you could see here's a big time outside day also in the spiders. You go to your 5-minute chart, and this is where I came back and I was like, what, let me try it and reshort a bounce. Okay, this was your move off the open. Okay, pushed through, squeezed shorts, came back in, and then look at this potent move to the downside, came back up, pushed the envelope a little bit. This definitely pushed the envelope. That's why people are like, Red Dog, why don't you stop out? I'm like, you know what? That's what the computers are doing. So maybe I reduced a little bit, but the VTF saw me pretty much stay short from around 184.20 all the way down to where we closed. I took a little bit off right around here, and then I put it back on. But lo and behold, you could make adjustments. So I got stopped out of some longs here, and then I cost average into a little spider short there, and then was able to salvage some of the day. And now if we do retrace from here down to the moving averages, I'm in a good position that I could be opportunistic and try and make some money. But we have to see how we open. First things first is today's low tomorrow to see how we handle it. Okay, so moving on from there, some other signs, I talked about the resistance in Apple around 550, 555. You had that topping tail into resistance yesterday, and then lo and behold, here it goes. That's where it fell. Nice little Bible strategy down here. Boom. Take away support 1. We put together a chart, put it on Twitter, and for you guys, talked about this 535 area that held first time. And now tomorrow we'll see. I'd love to see some type of maybe down open reversal, and that would be a nice little retracement. Then maybe it holds up and then pushes the next time through there. All in all, though, reversal, reduce risk after a nice run, down move. Okay, this actually was pretty textbook. I just didn't really trade it, and I stayed away. And hopefully now into my area. We'll see how we open tomorrow. We'll use today's low for a potential pivot, maybe a RDR, or maybe we open low, come back up. But I would think that this area should be somewhat viable, and that would be very healthy. We start pulling back a little bit lower, it turns more into the range bound trade. If we hold around here and get a nice entry, that'll be that'll be nice. Whatever. With that being said, let's move on. Let's just talk Tesla real quick, because a lot of people are trading it after hours. When I talk about pivots, let's come back to me. After hours pivots. Some people take option strategies into earnings. Some have been holding it for multiple quarters or years, and they're investors. When I talk about pivots after hours, there's an art to trading it. So now the pivot for Tesla after hours was the prior all-time high, 206. So with that being said, you come here. Okay, today there was some weakness. Okay, some people were scared to be long into earnings. I don't blame you. After a big move, they actually came out and upped their guidance. So if you did not take stock into earnings, you still had a decent opportunity to make money once it went above and stayed above 206 with that huge short interest. I'm not exactly sure where it's trading now, but pulled off. And now when I left, I was actually trying to buy it at 206, made peanuts. And then I came in here because I have to catch a 4:45 ferry. That's what happens when you're a dad and you haven't been around for a day or 2 days because you had to go to a Trader Expo on Monday. It cost me money. Anyway, with that being said, let's see if I could check on time templates. Maybe it'll show up that way. Let's see if to see where it's trading. We'll go West Coast. Maybe 5 minute. No. Anyway, with that being said, you guys can look for yourself. If you are trading this after hours, stay long as it stays above 206. If we're to come back below 206, then momentum leaves. Now, talking about momentum leaving, that's what you have to realize. I came in today, I was long some solar names, hoping that momentum would continue, because that's why I was trading them. That is swing longs, more like day 2, 3 day trades if momentum stayed. And they didn't. So with Solar City, I went home long Solar City, and it came back into this space. I lost money and got out. Okay, looked strong above the highs. I'll do this trade every single time. Came back below. I am out of it for now. I will wait. Probably up a little bit with Tesla if Tesla's still up. I was also in SPWR. It tried to break out above this prior area and couldn't. If you're in this trade because you're in the channel and you're holding it for a while and you know about their business model, their products, and you like it, okay. Then maybe you're still in it. It's still above all the moving averages and still looks good. For me, pushed above the prior high, came back in, that got me out, and now I'll wait. I'm sure you could say the same thing for the other solars. Another stock that kind of got us all good today was Yelp. Yelp wasn't ready. Okay, I came in long Yelp. I added into this area. Went quickly. If you buy in the first 15 or the first 5 minutes, it's risky. You don't know if it's the real volume. You don't know if it's going to hold. So I had the luxury of buying some, and I always trim and trail some. So made actually some money in that, and then I got stopped out of it later in the day, and now I'm flat Yelp and still fine. You just have a tail here. I was playing it for a momentum move. Right now, it still doesn't show that. Now I have to see if this tail gets worked off. You know, if you were giving it more time and you said, I'm not going to get stopped out unless it breaks this 88, that's fine too. For me, I was in it, I added, sold some, stopped out of some, and now I'm just going to wait. That happens sometimes in momentum situations. Amazon, you know, still looking weak. If you want to talk about the textbook H pattern, here is your pole, here is your H. Look at that. You can almost draw an H. So if you shorted the rally, now it looks as if it breaks this little area here, this 346, it could see the 200-day. And that's tough. You know, it's a tough trade because Amazon hardly breaks down, but you still have this whole earnings gap and never filled it. That hasn't happened in a while. Same way you had the earnings gap here to the upside that led to a big move. This one was to the downside, so it might be prone, you know, vulnerable to lower prices. In social media land, LinkedIn, we talked about maybe a second day, and you got a second day. Here was your red dog reversal. Here was your trade above this pivot. Some guys did it, some guys didn't. Either way, back into resistance. This was your day-and-a-half tactical trade. Now see if there's a little bit more. Talked about the potential in Twitter if the strength stayed, but you know what? It didn't. Okay, this has been the chart. You had a nice pause here versus the prior, rallied up, gave you a small trade into the gap. I thought I actually bought it here, and you know what? It didn't work. It was up, wound up buying it, sold it when it went negative, and then you also could have gotten out of the way once it broke below this ascending channel, once it traded and stayed below this prior 2-day pivot. So now it's kind of just no man's land. Let's see what happens next. Let's see it build. It went from being on my A list every day. Now it's back to the C list, and we'll see it just, you know, develop. Facebook was quick off the bat. You know, so this one, if you got it off the bat, you actually got paid because it went from red to green and then traded above this high here and didn't come off until late in the day, and still looks good above all the moving averages. So, you know, there you go. That one, if you went quickly with it, you know, you did well. If you went quick, but with Yelp, it just didn't work. Even LinkedIn was quick. Some are quick, and some aren't. So that's, you know, if you come back to me, that's the market. Yelp, if you went too early, you probably got hurt. Facebook and LinkedIn, if you went too early, it never really pulled back and gave you a chance. So that's the way it happens in the first 30 minutes. So you have to know the levels and know what you're willing to do and know what you're risking. As far as the banks, they gave me some clues of weakness. Yesterday, I got stopped out of my Bank of America. Let me show you why. Not because I think it's a bad company or whatever. I think this upper area, I was in it for a potential break to the upside. So what happened? It broke to the downside. So here was my stop. I tried again a little bit today. Lost a little bit of money trying it, but overall now we'll see how it handles, you know, this prior resistance that could become support, but the banks have been weaker. So for me, I said I will revisit. If you are an investor and you sold here and you think that you're not going to play it again for the rest of the year and you wanted to own it and you think it can go to $18, $19, which I still think it can, you better, if you sold it, look for some kind of reversal pattern to get back in, because then you're being extra cute. So with all that being said, you know, I got to run. I got a 445 Ferry. If you're trading Tesla and you bought it over 206 and it's still above it, congratulations. If you reduced your risk with the red dog reversal up at 184.50-ish, you know, and you got stopped out of some longs, it happens. You know, you're out of the way. You can embrace the volatility just in case this one day turns into 2 or 3 or 4 down days, which we don't know is going to happen. But if you're out of the way, it doesn't matter. And then we'll look for more tactical opportunities as it shows its face. Have a great night. I will see you tomorrow. Scott Redler, T3 Live.